So this other market that I want to show you, it's important, is the March 18 bonds futures chart using the predictive indicator of the Flux daily cycle marker tool, what's now known as the Tachyon daily cycle marker tool. Okay, and here's one of the things I want to show you. If we take the moving average off the chart and we just leave the predictive indicators on here, come with me, let's take a look at this. And I want to make all of the dot spacings the same so they're not so far away. Yep. Here we go. Okay, so bond futures are one of the most predictive on a daily scale as any of the instruments I've ever analyzed. Let me say this again. Bond futures are as predictive of an instrument on the daily scale as any of the instruments I've ever analyzed. So here's a year's worth of signals, February to February. What makes this chart phenomenal is that every signal on the chart is based on a forecasted behavioral pattern. So in the upper right hand corner, you'll see with the daily cycle marker tool, it's now part of this alpha package, the computer is telling us, the software is warning us, hey, in 8 hours and 31 minutes, you're going to receive a pattern 4 signal on your bar. Okay? Now, there are 4 cycles in this daily cycle marker pattern from the alpha package. There's a 1, a 2, a 3, and a 4. Think of them like seasons of the year. Okay? 4 quadrants of energy. Now, everywhere you see on bonds a large green dot is a pattern 2 or phase 2. Everywhere you see a little green dot is a pattern 1. Everywhere you see a little red dot, 1, is a pattern 3. And everywhere you see a large red dot, Mike, is a phase 4 or a pattern 4. Is everybody with me? So it's sort of like a dance. 1, 2, 3, 4. 1, 2, 3, 4. 1, 2. You get the point. Okay. Now, when we look at this chart, there are some assumptions we can make about behavioral expectancy. What are we, based on past predictions, past energy cycles, past iterations of these patterns, what are we generally expecting when we see certain colors, right? There are these windows that transpire where when we come up on a phase 4, notice what generally occurs in that area of time. When I say generally, nothing will be 100%, right? History repeats, but sometimes it rhymes. Nothing is 100%. But when we look at the phase 4s, for example, Mike, what tends to be the dominating behavioral underpinning of that time? What is the tide of the market when we arrive into a phase 4? Is it going in or is it coming out? Are we watching the water come up onto the shore, or are we watching the water recede and push away from the shore on a pattern or a phase 4? It's a rhetorical question in a sense, right? But it's important for you to recognize the question's answer. What happens when we generally on bonds come into a phase 4? The market either consolidates very tightly if it was moving up, or it drops pretty significantly. Conversely, and again, I understand we're belaboring the point in some sense, but it's noteworthy to come back and say what generally happens when we arrive at a phase 2 event. When we arrive at a phase 2 event, there is an introduction of energy. The market arrives at this point and there's an influx of buying behavior, right? It can last as many as 2 days. It can last as much as a week or more. But there's an influx of energy. Now, can you guys spot the places in the past where that influx of energy just slid right past the green dot? Let me show you what I mean here. And then we'll come back and add our moving average because it's an important part of this equation. As recently as January 31st, we had another phase 2. As recently as January 31st, we had another phase 2. And one, was there any indication, Dennis, Edward, was there any indication that any buying took place on that day? Other than it was an up-close candle, right? No. It slid right through. It slid right through. But all of these other phase 2s to the left, there's some indication that there was some buying. There were higher days, there were moves up, there were pivots, there was a sideways slide here. Price didn't go down at all. This is the very first one where there's this abandonment. Burn the ships. We are not buying bonds. Get rid of them. That's actually a great thing to write down. On an institutional level, when we arrived at a day when it was their birthright to buy, somebody was screaming, get rid of these contracts as soon as you can. Okay. And then the very next phase, which was the phase 3, look, dump them. Dump them. Get rid of them. I don't want to see a bonds contract laying around this office when I get back. Now, remember, we said that we can look through these patterns and understand what's happening based on what's happened before when we see these plays take out, right? So Earl, I'm just going to draw a rectangle here, and I'm going to sort of cordon it off because as of this sort of starts the whole sequence up here, right? That red dot pattern, that's a double top, then a failure. The red dots have been dominating. The phase 3s and 4s have been dominating since up here. Would that be a fair statement? The green dots are the ones that have been failing. The red dots are the ones that have been just pushing hard. So where have we seen instances of this in the past? Where have we seen instances of this in the past? Okay, let's do what we did yesterday. Let's create an anchor chart. Let's begin to understand the get rid of these contracts patterns. So I'm going to right click, create a template that has the same values on it, and then we're going to open up another ZB chart. And again, we can do this for any market. We're not limited to one instrument. The banks do these kinds of things across all markets. So we're going to come up here, get rid of that. Okay, and now I'm just going to start looking for other iterations of that. And right here we have two phase 4s that we pass through. We have two phase 2s that we pass through. That's easy for you to say. So let's just write that down. There's a phase 4 here. There's a phase 4 here. There's a phase 2 here. And there's a phase 2 here. Okay. We'll just clean this up so we can get used to it. So I'm looking for that collapse, that get rid of these contracts now pattern. And hold on. No, that one doesn't qualify. No. Let's go back. Let me pull this out so I can see it better. Hey, I want to ask you a question here. So here's one of the first things that I see. Earl, this is March down here. And over here, this is March. This is a 2015 chart. This is a 2018 chart. Okay, so check this out with me. Tell me if I'm crazy here. We have a drop from here right there. There's a phase 4. There's a phase 2. Here's the first phase 4. Here's the second phase 2. 4, 2, 4, 2, and now here's the 3. Let's come over here and draw it over here. I'm going to need a little help from everybody here this morning. But I think I'm pretty close on this one. Okay. Juan, follow me here real quick, okay? I'm going to use different drawing elements to help define different things in the pattern. On both sides, there's a phase 1 where the market has that pullback right here. You guys see that? We'll call it green. At that phase 1, that little bow and arrow pattern, there's a pullback. Okay. So we'll call this, we'll give it a letter. Let's call this A. That element of the pattern is the same. Okay, now one. The phase 2 in both of these patterns gets blown through. So what I'm going to do is I'm going to draw a line through the dot of the phase 2. Okay, everybody with me so far? I'm just looking at the pile of poop that they're leaving behind, and I'm looking for other piles of poop that look the same. So over here, one, I'm going to draw a green line through the phase 2 dot. Let's call that B. Okay? That line on both sides of the pattern, guys, is B. B. Okay. Now, the next thing that I see is the drive down into a new low. So one, right here on this candle, I'm going to go from the high to the low down. On the phase 3, I'm going to use a magenta line and make it stupid obvious like that. And on the right side over here, look, there's the phase 3 dot. And can you see, one, how it drives down into that low right here? Over here, let's call it that. And guys, I'm going to call that pattern C. C is the bottom. C! Okay, we'll do the same thing over here. C. Okay, so there's a lot of elements here that are similar around the same time of year as well. Matter of fact, let's take a look-see from this phase 4 to here, what that drop is. $14. Let's take a look and see over on the right side what the drop was. From here so far to the low. $8. Okay. The overall drop from here, which was the high of the entire pattern, was $11. Okay. So let's measure it. So, all right, so we got that. Now, where does it go from here? What's tricky is that the other phase 4, if you look at the sequence, think of it like a dance. 1, 2, cha-cha-cha. 3, 4, cha-cha-cha. Where are we in the dance routine? The phase 4 occurs here. And one, in this pattern, gentlemen, the phase 4 produces a big down candle. Can you see that? In this pattern, in this area, George, the phase 4 candle is the monster drop. It's the monster drop candle right here. See it? I'll color the body of it with a yellow candle. Of all of the pattern information that we have, can everyone see here? That the phase 4 candle is the biggest bodied down candle since the phase 3 right here. The phase 3 one produced this, right? We'll make it orange so it shows up. The phase 4 produced that. Okay, so over here, the phase 3 produced that. Now, can everybody see in this pattern over here on the right that we already have the yellow bar? Juan, can you see that? They already ran the play. They ran it about a day early, meaning if we wanted to make these patterns look exact, we would have to put a big one of these right there. Would that make sense to everybody? If this candle had the large red dot on it, it would be essentially the same combination to this lock. There would be a D here, and then over here we could say, oh, that's really obvious. That's a D here, right? But again, history doesn't always repeat. Sometimes it rhymes. And so today is the phase 4 day. In 8 hours, 11 minutes, we're going to get the bar will actually print the signal here. But one, if I compare it to the prior iteration of this around the same time of year, 2 years ago, 3 years ago, then we've already completed the pull up from the bottom, right? We've already completed this pull up from the bottom on this side. We've already completed the pull up from the bottom on this side. Okay? What does that make this candle here to the right? What does that make this candle here to the right in terms of bonds? What are we anticipating to happen today if this is where we are in the sequence? Up. Yeah. Okay, so we're right in that pattern. Now, how far higher do we go? All right, here's where it gets really interesting. If we look at where the pattern 3 was to the left, where these signals were, everybody notice there's a topping effect. Okay, so let's come through here and make another circle. If you look at where the highs were in the pattern 3, one, you'll notice that the market, and I don't know if it's going to do this or not, I'm just making a guess. You'll notice that bonds comes all the way back up to that high. And it collapses. They stop out. The traders who see that break, there's a huge climax right here, and then it falls. Okay, well, over here, what does that look like? Where is that wicky candle near the pattern 3? And one, I'm going to make a guess based on what I see and tell you that this candle here looks a lot like that candle over here, which is at 147.23, 147.22. In fact, let's use 2 more lines. I'm going to draw the body here. Let's use a different color that really pops out. How about, I don't know, brown? Brown, because brown really pops. Yeah, there we go. but we'll draw it on both sides. Ready? Take a look. Brown, brown. And then over here, brown, brown. So you see the similarities between the two patterns? So in bonds today, we're expecting a bottoming of sorts. Here's what's very different between the two patterns. There is less of a buying reaction here, meaning on the left side pattern, they came down and they couldn't get all the way to the lows before reversing. On the right side, they came all the way back to the bottom. There's a lot of weakness here, guys. There's a lot of weakness here. Okay. One of the next sequences is the phase 1 rollover right here. If you look, when we get to the phase 1, that's the climax before the fall. That's the climax before the fall. Okay? And then the next drop in bonds is the puncture of the next phase 2. Now I have the dates for those already in my version of the software, but if you have it, you have to wait for the next signal here. So after today, the date and time for the next phase 1 is going to appear. It's going to populate on your chart. The next phase 1 is an exhaustion zone. Okay. So right now, this is a temporary bottom area. I don't expect it. Let's put it this way. I don't expect it to come all the way back up to here. But I do expect a reversing, a bottoming, because this arrival down here in the 143 area was not sort of an ABC pattern. It was just a flat out plain Jane bottoming pattern right here. So today and tomorrow are retests of the low with sideways movements, congestion with half-hearted pumps. Third day, possibly, we have the big launch right back up in towards the highs of D at the 145 area. And if that continues, if it's able to sustain itself to the phase 1, then we've got exhaustion 1, 2, 3, 4, 5 days from that. Okay, so we'll come over here 1, 2, 3, 4, 5. 1 somewhere in this zone right here. We're expecting bonds to sort of peter out and reverse to the downside. And that's all I got about bonds today. But if you have this predictive software, you'll see that these signals are, when you look at them in totality and you want to get a feeling or an understanding of what bonds are going to do and for how long, there really is, in my opinion, no better way to track them, because the banks are definitely leveraging these energy levels.